Hey everybody, hope everyone's doing well and had a good day. This is the Emini end of day review for August 23rd, 2024. And I just want to start by saying this review and all of my subsequent reviews are going to be a little bit different. As much as I enjoy doing the bar by bar reviews, I'm going to start doing more brief overviews of the chart and try to keep it between 20 and 30 minutes. I just have other commitments that I need to spend my time on right now. So I will be back doing those reviews. I'm just not sure exactly when. So these ones will be a little bit different style. But with that, coming into the day, we had an outside bar on the daily chart yesterday. And we're in this tight rally on the daily chart, but it's consecutive buy climaxes, buy climax, pause, buy climax, pause, over and over. We're finally starting to go sideways here. The bears got a bear body. It was a trading range, so sellers above, buyers below. And that's what we got yesterday on Thursday. So we have an outside down bar, but the problem is the context. You look to the left, is this reversal bar going to reverse the entire rally? Probably not. At this point, it's the first reversal down. It's the first pullback on this chart. And the odds are it'll be a minor reversal, probably buyers below. Plus, it's an expanding triangle. It's an outside bar. And we know that that's a trading range. It's a type of trading range. We have 3 pushes up, 2 pushes down, probably buyers below yesterday's low. So then I have yesterday's high in blue, expected to be resistance. So we have that blue line above, and yesterday's low is down here, but it would not be tested today. So today on the open, very tight trading range. We had a gap up, but we're testing a resistance area from yesterday, and that was the bar 39 week sell signal bar, which got good follow through. Traders are trapped here. So the expectation on the retest of this red line is resistance. And then we got a surprising bull breakout. Surprises reset the market cycle. That's a leg 1 breakout. It's expected to get a second leg. However, we see yesterday's high not far above. We know that overall this is a bear channel, and we're expecting it to convert into a trading range. So probably sellers not far above. I had to pause there for a moment, but coming back to the chart, bar 7 is expected to get a second leg up, but the danger is that we're high in a trading range. And then look at the follow through on bar 8. It's an inside bar. The entire bar overlaps the prior bar, and on a smaller time frame, it's an implied pullback. So we rallied on 7, sellers into the close. We sold off on 8. That's a pretty deep pullback. It retraced more than 50% of bar 7. And now the rally might be the start of a second leg up to 9. So leg 1, pullback. Leg 2, weak sell signal bar on 9, probably buyers below. And this is still a breakout, no technical pullback on this chart. So the first reversal down is expected to fail. Plus it's a weak signal bar. So again, buyers below for a second leg up. And then we triggered the stop order sell, but it was a fairly weak setup. Maybe we're at about 50% of the opening range. This area will be support. The bear bar is a trading range bar. Even though it's a big bar, there's prominent tails above and below and lots of overlap. So a bear bar, probably traders buying the close and buying below. And then we rallied on bar 11. But if you're buying bar 11, you have to ask yourself what your premise is, because this could be a late leg. It's either leg 2, it might be leg 3, 1, 2, 3, and we're at resistance. There's not much space to yesterday's high, which is expected to be resistance. So if you're buying, you need a good entry bar, you need momentum, and then you were disappointed on 12. So bulls Buying momentum will exit disappointed. Bears can sell. It's a second reversal. A couple of climactic legs up in a trading range, and we could easily still fall below bar 1. And that's exactly what we did here. So we fell below bar 1, but buyers below, there's support. The sell-off here on 16 is a problem for the bears because as big a bar as it is, there's a couple problems. First of all, look to the left. The market's in a trading range. You look at this chart, you see big up, big down. You know it's not a bull trend or a bear trend. 16 is a big bar, so the bears controlled price for just one bar, but they did not control time. This is much stronger for the bears. That's time control. And it did get a little climactic down here, but the point is the bears are controlling many bars. When the bears just control one bar, you have to ask yourself if it's strong bears selling or if it's just a lack of strong bulls buying up here. Who wants to buy the high 1 or the high 2 high in a trading range? Strong bulls do not want to do that. Traders will sell above a high 2 high in a trading range. But then we got a second leg down, whether you call it bar 10 or 15, leg 1, and then 16, leg 2, second leg trap. Bottom of the trading range, and then a bull bar closing on its high, follow through. You probably have to get out above 18 if you're short. Double bottom. We rallied to the top of the range, expecting sellers up here, if you think about it. Bulls who bought earlier, if they were trapped buying up here, what are they going to do at this red line? They're going to try to exit their positions. We came close on 27, reversed down. So the market is sideways, a big up, big down, big up, and then big down again. This is a tight channel. It's a micro channel, no pullbacks. You're expecting the first reversal up to fail. Still no pullback. And then finally a pullback on 37, but there's a micro wedge down here, 3 pushes, and it's a nested wedge. There's 3 bigger pushes. 6, 17, and 36. So 3 pushes down. It doesn't matter if you use bar 6, bar 5. It also doesn't matter if it's a really small push. Computers see a swing low, and they'll connect to that to other swing points, and they'll draw all of them, and you'll see the market will respond to those areas. But in this case, we fell a little bit lower. 39 climactic bar. We also might be in an expanding triangle here. The bears are hoping it's an expanding triangle bear flag. This is a bear trend. This is a flag. We break out to the downside. The bulls look at it as a reversal pattern at the bottom of a trading range. It's breakout mode at the bottom of the range. The odds probably favor a reversal. The bears have done a good job controlling maybe 10 bars below the moving average, but their problem is the context. We also gapped up coming into the day, and the gap will be support. So maybe this breakout point, you can see that's exactly where we tested on 39, 40, and then we reversed up. Strong enough rally, probably buyers below the first pullback. This is a strong breakout, should get a second leg. It's low in the range, it's leg 1. And then a bad stop order sell, buyers below. The high 1 succeeds. The bulls end up getting a decent rally. The problem is the middle of the trading range. Traders will take profits there. Bears will start selling. So here's the midpoint of the day. And got a little bit above it before we went sideways. But this looks like a bull flag, not a reversal setup. This will probably get a second leg to the upside. And we went sideways for a lot of bars, but the bulls are controlling price and time and keeping the bars completely above the moving average. First close below the moving average in 20 bars. It gets bought, but this is climactic. We're getting to the top of a trading range. Bar 26 was a weak stop order sell signal bar, and that will be expected to be resistance. That's exactly where the market vacuumed to on 69. and we went a little bit above it, but we're still at the top of a trading range. The bulls could not break out of this swing point. We came close, but now it's 2 legs up in a trading range. And then we tested that swing point, but again, only got a couple of ticks above. It's a trading range, so we're expecting breakouts to fail. For stop order trades today, I thought it was very reasonable to sell below bar 13, reasonable to buy 17 or above 18, or even 20. And then you could sell 27. Better to sell below a bear bar, closing below its midpoint, so not 28, but 29.30 is also reasonable. Down here, you're selling low in the range, it becomes more dangerous. 3 pushes down, reversal bar, not high probability, buy above 40, but reasonable swing buy, and then higher probability with a good entry bar 41 you could buy. You could buy the high one, 45. Always in long, you can buy above any of these bull bars. But when you get to the top of the range, it's better to start to look to take profits. Even though it's a spike in channel, bull trend, look to the left, we're still within the overall trading range. Alright, that's about it for today. Thank you for watching, and I'll talk to everybody next time.